Hey everyone, in this video I'm going to conduct a very basic financial statement analysis for AMD stock, one of the most popular AI stocks in the market today. So I'm going to look at its financial statement. I'm going to conduct that basic level analysis, and this is intended for non-financial professionals. So it's going to be understandable for nearly everyone that's interested in the stock market but is not a financial professional. So with that being said, let's jump in and let's take a look at this financial statement.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Okay, so let's start with the overview. And AMD says that they are a global semiconductor company primarily offering server microprocessors, in other words, CPUs, GPUs, data processing units, FPGAs, and SOC products for data centers. These products are integral to developing AI and other markets as well, not just AI. In fact, AMD hasn't seen the kind of increase in customer demand for AI use cases similar to its rival NVIDIA. NVIDIA is a clear leader in that regard, although we're going to see in this statement that AMD is investing, is preparing to expand its offering of AI services, AI products, so that it can grow to compete with NVIDIA, even if it doesn't catch NVIDIA. At least if it makes progress, that's going to be a big improvement for AMD. So in the third quarter, they introduced a number of new products, including their AMD Radeon Pro W7000 series, the AMD Radeon Pro W7600, 7500, and these were designed for workstation graphic cards for mainstream professional workflows. They also unveiled the AMD 7800 XT and 7700 XT graphics cards. So a slew of new products came out for AMD in the third quarter, and that should lead to increased consumer demand. A lot of times what happens with these types of products is customers know that they're about to come out, and so they'll stop purchasing the previous generation products in anticipation of the next gen products being released and available. Even if they don't want the next generation products, customers will wait for the next generation products to be released, because at least that will cause a price discount for the most part on the older generation products. So it creates a bit of a vacuum for sales for AMD and other tech companies when they have a new product, the next gen product coming out. There's a bit of a vacuum in the months leading up to that next gen product. So now that these are out, sales should increase for AMD. Also, AMD had approved a stock repurchase program authorizing repurchases of up to $12 billion of their common stock, of which $5.8 billion remain available for future stock repurchases as of September 30th. So they can still buy up to $5.8 billion of their own stock. Now, this is good news. I like when I see companies do this because, for one, it indicates that they feel their stock is undervalued. And if the stock price does fall, then they can come in and buy up those shares and limit the downside of that stock. A lot of times you'll hear me complain about CEOs that come out and make statements saying, oh, we feel our shares are undervalued, or we feel our stock is undervalued. But while they're saying that, they don't have a repurchase program in place. They're not buying back their own stock. So they're coming out and saying empty words, trying to convince you, the investor, to buy their stock when they themselves are not buying their own stock. That tells me that they don't really feel that their stock is undervalued, but they want you to think that their stock is undervalued so that you will go out and purchase it, because what they want to do is sell stock. They want to sell their stock. So if they want to sell their stock, then they want the price to be higher. So when they sell it to you, you'll pay a higher price. But if a company is interested in buying its stock, then it's not so much interested in convincing you to pay a higher price, because if it wants to buy, it doesn't mind if the price goes lower, because then it can buy at a lower price. So I often caution investors when they hear a CEO coming out and talking about how they feel their stock is undervalued and how it should be higher, and look at all these great things that we're doing, and that's why our stock price should be higher. Whenever you start hearing that, you should start to be skeptical of that company and really look into if they're buying back their own stock. If they're not buying back their own stock, but they're coming out and trying to convince you to buy their stock, that's a big question mark for me. And I'll typically stay away from companies like that when that's what's happening with senior management. So AMD operates in four major segments, and that includes data center, client, gaming, and embedded. And from these segments, the two most important in terms of operating profitability are the data center and embedded. Even though revenue is similar across the board, when you look at operating profitability, you can see that data center at 306 million and embedded at 612 million in the most recent quarter. And if you look at the most recent 9 months, it's even more pronounced, with the embedded segment being much higher than the data center segment, although the gaming segment did increase above the data center segment. Although longer term, the data center segment, I feel, is more important for AMD. And you can see in the previous year that it was significantly higher in terms of generating profitability for AMD. So when I'm evaluating AMD stock, the two segments that first come to my attention are data center and embedded. And I want to know more about these two segments before I move on to any other segments in the company, because these two will dictate the majority of how this company will move forward. So you'll notice here that in the data center segment, operating income fell from 505 million to 306 million. So I want to know more about that, and AMD does give us more information. It says that the decrease in operating income was primarily due to increased research and development, investment in artificial intelligence, and product mix. So as an investor, if I was an investor in AMD stock, which I'm not, I don't own AMD stock. However, I have recommended AMD stock as a buy. It is in my list of top 24 stocks to buy for 2024. I published that list in early January, maybe late December, so right around the start of the year. And AMD stock has been on that list. And I'm happy with AMD's investments in artificial intelligence. I would want that because we've seen how lucrative that market is. When you look at Nvidia and you look at Nvidia's latest results in the last 2 to 3 quarters, you can see just how lucrative this market is, and AMD is in a good position to capitalize on that. They're right there. It's not a big step for them to offer these AI products and offer more and more AI products. So I would be happy with this as an investor. I like this explanation. I'm happy with that. So then we move on to the embedded segment, which they note that revenue of 1.2 billion decreased by 5% in the most recent quarter. The decrease in net revenue was primarily due to lower revenue in the communications market. So there's one segment of the market that it serves that decreased spending, and that caused AMD revenue to fall. For the 9 months, revenue was up 35%. So what gives? Why was it up 35% in the last 9 months but down 5% in the last 3 months? Well, that's because it included the revenue from the embedded product revenue mix from Xilinx for the full 9 months in 2023 compared with the partial period in the year before. So the company made this acquisition, and last year it didn't account for that, right? It wasn't included in the company. And now that it includes this company's revenue in its own revenue, it made AMD's revenue look better than it was. So in the 9 months, it wasn't as if embedded revenue increased organically for AMD, but it made an acquisition, and counting their revenue as a part of AMD's revenue made their own revenue look better. And then again, operating income fell, but the decrease was primarily due to increased investment in R&D. Again, I like when I see companies spending in R&D, research and development, especially when they are companies that have proven that they can spend money in research and development and release innovative products that customers buy. Right? So a company like AMD, I'm okay with them spending money on research and development, especially with this AI opportunity in front of them. Go ahead, spend more on research and development. I would encourage that. But when I see other companies that have not shown that kind of effectiveness in their spending, I don't like to see that, right? I don't like to see companies that are not effective in research and development allocate more spending there. So this is a case by case basis. If the company is proven, then you want them spending more here. If they're not proven and they've shown that they waste a lot of R&D spending and they don't come out with very many new products that are profitable, then you want them to decrease this area because clearly this is not an area that you're good at. So stop allocating capital here or stop increasing the allocation in capital here. All right, so that's what I'm going to cover in this video. I hope this has illuminated some of you who are interested in AMD stock. If you have any questions about anything I covered, ask in the comments below. I'll be happy to answer. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.